Good evening, students. How are you all doing? So, let's start off with this chapter, Insolvency and Bankruptcy Code 2016 for CMA Final students. Now, before we begin, let's understand what is the weightage of this chapter from examination purpose, because at the end of it, your learning as of now is restricted for the purpose of examination. In that process, if you can add some conceptual clarity and all, it is definitely going to help, but your prime focus should be your examination. So, taking you through this, see, this is the weightage that is given by ICMA Institute. Now, if you look at it, the one that is colored with, so this Insolvency and Bankruptcy Act, now it is called as a code because it is combination of several acts. So that is what is the difference between act and code. You are aware, so I am not really getting into the details. So, Insolvency and Bankruptcy Code 2016, this itself comes for 10 marks. So, from the examination perspective, it is a small chapter. Roughly, there are about 20 to 25 pages in your material. Of course, the 22 material, to get hold on it, you need to get into little additional information which may make it my study material into 30-40 pages, but don't worry, the pages shouldn't be the guidance for your getting scared of it. The concept is simple, and this is the chapter which you can crack it better once you are good with your fundamentals. So, keeping that point in mind, listen with the free mind. This is an easy one, and you can easily score this 10%. And why I say it is an easy one is for the simple reason, the questions are mostly on predictable lines. So, you can expect the question. I am not trying to say that they are the most easiest one. No, that will be a wrong statement, but you can handle them. If you are good with the concepts, yes, it is a doable one. So, with all that confidence, let's start off. What is this Insolvency and Bankruptcy Code 2016, and what are the key concepts that are involved in this particular chapter? And then let's see how do we go about it. And covering all this in a single video may be difficult, or it will be running too much into your minds. So, let me take it through multiple videos to make the concept clear. Now, before we begin all this, let's understand how did it emerge, this IBC code, whatever we are talking about. What is its origin? How did it emerge? Now, it has got a long history, even much before our independence. If you look at it, there were various laws. It's not that this is the first time we are trying to address this concept. There is a long history. It started with 1909, where we had, at that point of time, this Presidency Towns Insolvency Act. From then, like you can see, there various attempts were made to fine tune it and make it in line with the current requirements. So, origin from 1909 to 2002, including that Surface Act. So, among this, the Surface Act was considered as little major change after this SICA. So, in between, they were not really helpful and they didn't sustain for a longer period of time, but this sustained. 2002 Surface Act had sustained, but still the problem with this old acts was there were multiple acts. The problem, why there was a need for this new code, there were multiple laws and multiple forums which we may have to deal with that, and then overlapping jurisdictions. So, multiple authorities were dealing with the same case. So, there were little challenges in legal issues and all this. And on top of it, the biggest challenge that we had with this was a long delays. So, all these acts didn't help. There were, I would say from my side, there were two reasons why all these old acts had failed. One is the long delays, and the second one is all these were basically debtor centric. That is, who was holding the control on the entire position was the debtor, whereas he is the defaulter, but he is the one who is having the position. So, therefore, it was not really useful and it didn't help much the creditors to recovery. That is why there were low recovery rates for the creditors, and the sole intention is to benefit the creditor, but when he is not getting the benefit out of this, then there is no point. That is where they felt, no, this existing laws doesn't help. making small to one or two amendments here and there is not going to do it. We got to change the entire process of it. So that is where they brought in this new one. Then how did this new journey started? Now, if you look at it, the reforms, how did it started? It started with 2014, whereby they started forming this bankruptcy law and reforms committee was constituted to study this process. And despite several amendments that are being made, this was becoming a failure. So why was it? And then a lot of steps were made in 2015 and then 2016, and finally the parliament had cleared it in 2016 May, and the president had given accent on 28th May 2016. So from then onwards, this code has come into this place. So this is the brief background. So to summarize, what is the difference between the earlier acts and the current one is a code. So it's a combination of several acts, point number one. And the main advantage for this is to speed up the process of resolutions. And the point number three, to help the creditors to recover the substantial portion while retaining the main objective of continuing the debtor as a going concern. So with all these objects, this act has come into picture. Now, let us look at our syllabus. Now, this entire IBC is divided into 4 modules for you. Like you can see, 2.1, 2.2, 2.3 and 2.4. So, the first one is completely definitions. So, there is nothing much in it. It's all about the definitions and little introduction into what are the objects and what are the definitions of it. And later to it, in 2.2, we have the major significant portion, that is Corporate Insolvency Resolution Process, CIRP. So, this is the very important stage in this entire process. So, this module gets a lot of importance in terms of examination and in terms of coverage into the major concepts of it. And then in your 2.3, we will be talking about the liquidation process. So, if the resolution fails, then the liquidation starts. So, how do you liquidate a corporate person? So, and then 2.4 is about the personal insolvency. If you look at it carefully, 2.2 and 2.3 talks about corporate persons, whereas 2.4 talks about personal insolvency. That is the major essential difference between each of your modules. Now, this definitions, I am not going to cover too much into it. With a given limited time, let us focus on the core concepts, because the objective of this video is to give you confidence that yes, you can crack it in a comfortable manner, the way how it is required for it. And in my next video, I will take you through the detailed discussion on the definitions as well as the liquidation process, and then about personal insolvency. All that also we will cover. But in this, the core idea and the core concept that we are going to discuss is about this corporate insolvency resolution process. Now, let's begin. What are the, if we look at it, the background and all, I have explained it enough. So, whatever is required for it, and what were the various laws that were governing before, we have seen it. So, multiple laws, same points, repetition and inefficiencies in resolving it. So, the very objective of why it is started was not getting fulfilled. That is where we started with this new code. Now, what are the objectives of your new code? If you look at it, the code aims to first consolidate and amend the insolvency laws. Whatever the various laws were there, they wanted to consolidate and make it one single code. That is the background behind this code coming into picture. And then maximize the value of assets. That is, wherever it has to be liquidated, they wanted to get the maximum value even for the data. So, this is second point, is more in favor of the data. And then promote entrepreneurship. All these are the connecting objectives. And then improve the availability of credit, and more so balance the interest of stakeholders, that is the debtors and creditors. Even in the creditor, there are operational creditors, financial creditors, which we will see to it. So, I would rate that ideally you should remember all these as objectives, but what you shouldn't forget are 3 objects. One is, it is to consolidate. Second one is the maximization of the value of assets, and third one is establishing this IBBI, so Insolvency and Bankruptcy Board of India. So, these 3 You must write it in exam, and of course, it is expected to remember and write the balance 4 as well, but these 3 are the mandatory ones. Now, let's move on. Whom does this IBC is applicable? For whom this code is applicable? This code is applicable, let me take you in detail. So, this code is applicable to companies incorporated under Companies Act, and the companies incorporated under any special acts, and LLPs, other notified body corporates, the regular partnership forms other than LLPs, and the proprietorship concerns whatever we are having, and the individuals. So, it covers even the individuals also to as a part of it, and then the personal guarantors, whoever were given the guarantee to the corporate debtors. So, all these people it is applicable. Then for whom it is not applicable? So, if you look at it, it is basically is not applicable to entities which are providing financial services. That is what we say, financial service providers are exempted. Who could be those? As an example, banks, and then any other financial institutions, insurance companies, and asset reconstruction companies, mutual funds, and collective investment schemes. So, and then pension funds. So, these ones are basically not covered through the code because they have their own mechanism and there are separate process to deal with that. So, these have been exempted, but otherwise it is applicable to all. To sum it up, it is applicable to all companies and all LLPs and partnerships, including proprietorships, and individuals and personal guarantors, to put it in a simple way. So, this is whom it is applicable. Moving on further to it. What is the framework? See, as of now, just stopping for a while and trying to go back and see what did we learn. First, we started looking at what is this code, what is the weightage of this code in the examination, what is that we are going to cover through this, and then we started talking about and learning about the past history of what were the earlier acts, what was the problem, and what is the need for this current act, because understanding that will help you making the current objectives of this code much more clear. So, that is where we had put in that little extra efforts in understanding. Then the immediate topic that we discussed was for whom it is applicable and for whom it is not applicable. Now, we are moving on to this regulatory framework. So, in this regulatory framework, who are all the people who are involved in it? Say, first, insolvency professionals. I'll come in an order. So, insolvency professionals, insolvency professionals, and second one, insolvency professional agencies. Then you have information utilities and IBBI, of course. So, the prime institution. Apart from all this, whenever any decisions are being passed by this, we do have adjudicating authorities like NCLT and all of them. So, these are the 5 pillars we can say which are required to keep up this code in its effective form. Now, in this, generally as student you will be able to connect to everything, but from examination perspective you shouldn't get confused between these two: insolvency professional agencies and insolvency professionals. Insolvency professionals are the like the name suggests and the nomenclature, these are the professionals who would be holding that entire process of it. So, they are the persons in command who would do it, and they are the knowledgeable people, they are the professionals. But these professionals are monitored and mentored by these agencies. So, these agencies, insolvency professional agencies, they themselves do not participate in the process of resolution, but they monitor the professionals who are actively engaged in this process of resolution. So, that is the difference between IPAs and IPs. So, IPs, to repeat, IPs are the actual professionals who would be taking part in the resolution, and IPAs are the agencies which guide them, which control them, which monitors them, these professionals. That is the difference between them. And even after interaction with the students, the general doubt they get in is, what are these IUs? That is the information utilities. What are these? See, these are the institutions which will gather the data about the debtor and the default and various things relating to it. So, the information that is available with them will help in speeding up the process. But who would have this? So, as of now, you can take this as an example, NESL, that is National E-Governance Services Limited. So, this is an example of it, and you can get the data from this information utilities, and that will help in getting the legal validity of be it a default or be it an occurrence of default. For all this information, once it is confirmed by utilities, the courts are going to trust them. So, that is the role of them, and in any case we will discuss in detail in the process of it. So, this is the brief background of it. Then we will move on to definitions. As I said, in definitions in this video I am not really touching, but while explaining the concept, what are the definitions that are required, that I will cover to it. And the next one that we need to touch on is, what is this resolution process? So, what is it involved? Where does it start? So, that is what is the whole essence of this entire video. So, let's quickly move on to this particular topic of corporate insolvency resolution plan. So, how process, how it will complete, where it starts and where it ends, logical begin to that end. That is what we will be discussing. Now, look at this 2.2, which deals with corporate insolvency resolution process. Now, what do we mean by this CIRP? It is a legal process to, which is required to initiate, and which is initiated by the debtor over here. This is initiated wherever there is a default committed by the debtor. So, to repeat it, what is the CIRP? It is a legal process which will help the creditor to recover whatever the claims that are due to him, and the entire process begins only when there is a default. So, if there is no default by the debtor, this has no relevance, this concept has no relevance. So, this process would get its beginning only when the corporate debtor commits a default and the creditor wanted to recover. That is when the entire process that is involved right from the default stage till the time of recovery, that is what is covered in this corporate insolvency resolution process. Now, what is this process aims to? Now, before I continue, whatever the notes that you are seeing, this is compiled 100% based on your CMA material. The only thing that I have added here is, I have added little, because your material was in paragraph form, I have converted them into bullet forms, and for easy reference and easy understanding of it, I have also added the smart charts wherever it is required. That is why when you see it, the length of this may appear slightly more than the material, but it's not that we have added more irrelevant content. It is appearing so only because we have tried to add the smart charts. Maybe once you start preparing, these charts will help you in getting the grip of it or in making the revision. But as of now, I will continue my discussions with the detailed discussion. But whenever you are reading, I am confident that the smart notes that is prepared and all will help you in understanding this entire process. So, don't really worry about the length. It is length is getting into little long because of the font that we have used and because of the spacing that I have given. Like you can make out, see, even between the lines, now I have given almost like one over there. So, if I reduce all this and if I make it crisp, it will become much more shorter than your material. But the intention is to give comfort to the students whenever you are reading. And trust me and be confident, you will get hold on the entire process in a simple and effective manner. So, let's begin understanding this. To start off, what is this corporate insolvency resolution process? It's a legal process. And when will it begin? It begins whenever there is a default by the debtor. And when it will end? It will end by finding a resolution for this recovery process. What is the process aims to? Because this is a legal process. What is its objective? What is this it is aiming at? It is aiming at resolving the insolvency and reviving the company as a going concern. This is the prime one. See, the earlier acts were like, okay, somebody is not paying, go attach his properties, close him, liquidate him. So, they were more like a threatening agencies, where they were not thinking of the data and they were only trying to sell everything and get back to it. But Was it done in an effective way? Even that was not done effective. But the entire one was all the earlier acts, the entire motto was to liquidate the entity, sell that, then distribute the money to the creditors and close it. But this code aims to, let's see the probability of continuing the debtor as a going concern, but still helping the creditor to recover his money. That is where we said the entire objective of this code is to balance the interest of the debtors as well as the creditors, and then maximize the value of assets for the debtor. So, whenever this process is sold, and then this is what I was trying to talk about. So, this is the sole aim of it. Now, how does this process starts? Who can initiate this corporate insolvency resolution process? Who can initiate has been defined in section 6, but overall the process that is required is talked about in different sections. If you look at it, there is a section 7, here 8 and 9 and 10. So, 7 to 10 are the sections which will talk about who can initiate this CIRP. There are 3 people. One, financial creditor who can start it off. Second one, operational creditor, option number 2, or option 3, the corporate debtor himself may start it. Now, what is the difference between financial creditor and operational creditor? It will come for a detailed discussion in our next video, which will be on the definitions. But to make you understand the terms at this level, financial creditor is the creditor who had provided finance. So, he is a creditor because of his involvement with the debtor and financial ones, like giving it loans, etc. and all. Whereas, the operational creditor is a creditor out by supplying. What he did basically is the goods and services, like the material supply, raw material suppliers, or these kind of people, the regular ones. So, they will come under operational creditor. So, these financial creditor, as the name suggests, they are the creditors who had provided finance, and operational creditors are the people who had provided goods and services. Goods and services. Then what about employees? Because say if the company had not paid money to the employees, then where will they fit in? So, employees also will come under this. So, to this we need to add employees. And then what about the money due to the government in the form of unpaid taxes, be it sales tax, now the GST, or be it income tax, whatever it is, all the statutory dues, to put it in a simple term. So, all this that also been categorized as an operational creditor. But why is the difference required? You will come to know shortly. So, that is what is our discussion, the upcoming discussion. So, to come back to it, who can initiate this process? One is financial creditor, second is operational creditor, third one is a corporate debtor. Then what are the sections that are involved in it? Section 7 deals with the financial creditor. 8 and 9, actually application is made under it. Let's not confuse us. 8 and 9 deal with the operational creditor, and 10 deals with this corporate debtor himself. Now, then who cannot make an application? Say we talked about who can make an application, who can initiate, but who cannot initiate an application? These are the people. So, these people cannot initiate, where this process is already undergoing, that is the CIRP is already undergoing, maybe for another debt by another scenario. So, then they will not allow you to restart it, or where they are already undergoing, the corporate debtor is undergoing the pre-packaged insolvency resolution. This is a specific term. I will explain this, but first let me complete the discussions who cannot file an application, and then I will take you through what is this pre-packaged. So, first is where this process is already undergoing, and second one where the similar process has already been completed in the previous 12 months. So, just 12 months before we completed a process, and again we are getting into the same one, they will not allow. So, he cannot initiate, that is it cannot be initiated against this corporate debtor. And plan was approved during previous 12 months. So, plan was approved and it is about to get implemented, then you can't start parallelly another one. Or there was a violation of the approved resolution plan in the previous 12 months. One plan was already approved, he has violated, then he won't be given a second chance under this mechanism. Then let him get dragged to the court, and they will look out for liquidation, and that is what it is, because he is violating the resolution plan. And finally, where the liquidation order has already been passed, that's the last step in this process. So, if the resolution is not possible, they would go in for liquidation. So, these are all the situations where an application cannot be made. So, to repeat it, who can apply and who cannot apply, who can initiate. Section 7 to section 10, 7, 8, 9 and 10. 7 is by the financial creditor, 8 and 9 is by the operational creditor, and 10 is by the corporate debtor. So, this is what are the sections that deal with who can initiate. Who cannot initiate, then these are the ones where it is already undergoing, or it has just completed in the last 12 months, or the plan was already approved but it is in the process, or there is a violation of this plan in the 12 months, then you can't start another process. So, they won't allow it. Or where the liquidation has already been passed, then again you can't restart it with the process. And now we are left with this pre-packaged. I will tell you, see the difference between pre-packaged and CIRP. That is actually, it is CIRP or PIRP. So, let us not get into the abbreviations. What is a pre-pack? I will just be brief, because there is no detailed discussion warranted at this stage. So, what you need is just like a passing statement, but you still need to understand. Pre-pack is a situation where the debtor and creditor have already negotiated voluntarily between themselves, and they have come up with a plan, but they want the court acceptance. So, that is where they have already finalized the plan. Now, they are going for the approval of NCLT for a quicker resolution. So, the plan has already been agreed by the debtor and creditor. So, no big discussions are required, no big creditors meeting and then the debates and fightings, all that are not there. Debtor and creditor has already negotiated and they are already cleared, they have already laid down the path. Now, they want the court to monitor it and close it, that is all. So, that is why we call it like a pre-packaged insolvency. So, whatever it is already been in place. So, therefore, further CIRP they will not allow. So, to cut it short, remembering it in a shorter way, who can initiate? 3 people. Now, you tell me, who all can initiate? What are the sections that are covered? 3 people: financial creditor, operational creditor and corporate debtor. What are the sections involved? 7, 8 and 9 and 10. So, this is what is about who can initiate and who cannot initiate. There is a section in your material, he immediately jumps to section 29 after section 10. So, whenever we come to that logically, I will come to it and touch it. For the time being, I will pass that one, because it is always better to move logically. Now, let us start with section 7. What is section 7? And that is what we just talked about. So, section 7 deals with the situation or the process required when the initiation is by the financial creditor. Now, let us look at it. What is the process involved in this particular mechanism under section 7? So, under this section 7, the first step is the financial creditor is filing an application. Now, with whom? With NCLT, because NCLT is an authority notified under IBC here. So, therefore, financial creditor is making an application to NCLT, but when will he make? Like we talked about, the entire process will begin only whenever there is a default. So, on the occurrence of default, then the financial creditor is appealing to NCLT. Then, what does this application should include? It should include the record of default, that is, there must be a proof of default and all, and they must recommend, they must propose interim resolution professional. So, why we call them interim is, this is, he is the person whom the creditor is looking at to help them to complete the process, but it has to be accepted by NCLT, because at the end of it, NCLT will take the decisions. So, till the time, and NCLT, and we will be getting into COC, I will get into it shortly. So, at this stage, the financial creditors are proposing, we are comfortable with this professional, so to initiate our process. So, whom we call it as an interim resolution professional. And once you submit these two, NCLT will go through this application, whatever you have submitted, whether it merits further treatment or it requires to be rejected. And for accepting or rejecting, the NCLT is given 14 days time. So, this 14 days, take it with 3 stars and probable short answer question or an MCQ. So, remember this is important. When they will accept, when they will reject. Now, they will accept logical reasons. If the default is proven, that is the default is existing, and then the application is complete, whatever the application they have submitted, they provided all the details, and whomever they have recommended, IRP, Insolvency Resolution, Interim Resolution Professional, there are no disciplinary proceedings against him. So, the person whom you wanted to help you resolve this process, he is not facing any disciplinary proceedings. If all three are yes to it, then they will admit it. This application NCLT will admit. When they will not admit, so this is your box number 2. When they will not admit, indirectly when the application is rejected, exactly opposite. When there is no default, logically, here the default exists, here the default doesn't exist. Second one, application is complete here and application is incomplete here. The third one, there are no disciplinary proceedings here, but there are disciplinary proceedings against this IRP. It is exactly opposite. So, in all these scenarios, he is going to reject the application. But if it is a mere incomplete, it's a clerical formality, or the IRP whom you have recommended is having, then the financial creditor logically should be given an opportunity to rectify. That is where we talk about now the applicant is given 7 days time to rectify the defects. Take 1 star to it. Important points, timeline, 7 days to it. So, these are the process. So, if we go back and look at it, what we have discussed, where this IBC is initiating, this entire IBC process is getting initiated only whenever there is a default. But who is committing the default? By the debtor. But is the debtor individual? No. Under this process, we are talking about corporate debtor. Corporate debtor. Then am I including only company when I say this corporate debtor? No. Companies plus other body corporates, I am including other body corporates. Who could be these other body corporates? LLPs, and apart from body corporates, LLP is a body corporate, we are including. Apart from body corporates, we also talk about partnership firms plus individuals and even the proprietors who are doing the business. So, and the sureties or guarantees. So, these people also involved. For all these people, this is the process that is involved in it. So, now these are the general people for whom the code applies. But this particular one, since we are using the word corporate debtor, so obviously we talk about these two things. So, that is the companies and LLPs. For these firms, individuals and all, the process is different. So, this is whatever the process we are talking, that is not relevant to them. So, this is only for these two people. So, that is the linkage between whom all the code is applicable and for whom we call them as a corporate debtor. Now, go back to it. What is that we have discussed? Now, again I will summarize. So, the corporate debtor has committed a default. Now, he has committed a default. But then what is the triggering point here? So, the financial creditor, he would have made several requests to him for payment, but it is not happening. So, he is directly going to NCLT. So, whenever he is going to NCLT, he will submit an application along with the proof of debt. Then what the NCLT will do? NCLT is given 14 days time to go through this application and the other information they have given about the proof of debt, and they will also be recommending one IRP, interim resolution professional. So, NCLT will go through about this person, whether is his track record is clean, or is he having any disciplinary issues. So, by considering all this, NCLT may accept or NCLT may reject. So, that is what we have discussed over here. Then this is the initiation under section 7 by the financial creditor. Same is the process under 8, 9 with slight modifications. Under 8 and 9, it is the operational creditor who is initiating the process. What is required? So, first a demand notice is required for the services he had rendered, or he must produce a copy of unpaid invoice. And once these two are given, then the corporate debtor is given 10 days time. All timelines you must remember. 10 days. We will give you the summary of all the timelines. So, first we will learn it, and then I will help you revise and get hold on it. Corporate debtor has 10 days for what? Either to pay the amount and close it, and once he makes the payment, there is no need for resolution. The matter ends over there. Or he is not making the payment, but is agreeing that yes, there is a dispute existing, but I don't have money to pay. So, this is the step number 2. And then what happens? If no payment is made or dispute is debated or agreed upon, then the operational creditor will move it to NCLT. So, similar to your section 7, under section 9, the operational creditor will move it to NCLT. So, this is covered in your section 9, and giving notice and all is covered in section 8. So, that is the difference between 8 and 9. Again the same one. When the NCLT will admit the application, they will admit the application only when it is complete and the debt is really unpaid, and the notice, demand notice is delivered, which is delivered under section 8, and no notice of dispute with regard to it, or no disciplinary proceedings against the IRP. So, only when all these are satisfied, then this NCLT will commence this process. Now, the third one, who would be starting this is corporate debtor. Debtor, corporate debtor himself, or because since it is a debtor corporate, debtor itself may file an application to it. So, to NCLT saying, yes, I have debts, I am not able to pay, but this is my plan, I am into this financial crisis, but I am hopeful of recovery. But the creditors are not allowing me to do my business, and they are, so I need the court's intervention. So, in such a scenario, the debtor itself may file an application with the NCLT. But for this purpose, who would take the decision? Because when you say corporate debtor, who would take the decision to go for voluntary one? So, generally the board will take the decision, but apart from board, it requires a special resolution from the members. But what if it is an LLP? Then 3/4 of the partners minimum are required. So, at the end of it, whether it's an LLP or a company, 75% majority is required. Then once the debtor is applying, NCLT is given 14 days time. So, time given to NCLT to accept or reject will continue to be 14 days. So, there is no change in it, only the people are differing. So, if you look at it, who is approaching NCLT? So, I am summarizing. Now, you should be able to help me out. Who are the people who will make an application to NCLT? First one, good, financial creditor. Second one, good, operational creditor. And third one, the debtor himself, corporate debtor himself. Now, what are the sections involved? This is section 7. There are 2 sections. One is for giving notice and one for is making application, and debtor himself 10. But common point is all these people would be making an application to NCLT. And what is the NCLT can do? Now, once an application is received, NCLT can accept or NCLT may reject. For doing all this, what is the timeline given for NCLT? Whether you want to accept or reject, 14 days. 14 days from the time of application that you have received, NCLT will decide whether this application should be processed further and that is accepted or it should be rejected. So, this is what is the brief of what the process that we have discussed thus far. Now, let us continue. So, what are the 3 timelines? What is the time limit for CIRP? The day when you are submitting your this one. From then 180 days is the normal period, that is 6 months. But for any reason, if that is not being met, they will allow extension of 90 days. But whatever it is, with extensions and with the legal process and all, the entire period, the entire process should get over by within 330 days. So, setting this time limits for a speedy closure is the beauty of this IBC code. So, 330 days is the maximum. So, 180 is the normal, but if you couldn't do it, they may extend by 90 days, but including all your legal process and everything, you have to complete it within 330 days. But one small legal technical correction here. In the material, it is given as 360 days. So, in the source document, our source document is, I have used that word source because it's unfair and we shouldn't be talking about any mistakes by ICMA Institute apparently. It's a clerical, it's a typo error. That's why the source document, it is mentioned as 360 days, but this is incorrect. What is correct is 330 days. So, please take note of it, and 330 days is the correct one as per the legal provision. So, that is the normal. Now, let us move on. Now, we are getting into section 13 and 14. That is, now you tell me, who is making application for CIRP to whom? So, there are three people, I am repeating that process: the financial creditor, operational creditor, or the corporate debtor himself. All of them are making application to one authority, that is NCLT. And thereafter, NCLT will decide whether to accept or reject. And for this process, is given time of 14 days. This is all that we were discussing as of now. Now, whoever have applied, and if the application is accepted, then what happens? Then moratorium will be announced. Now, what is this moratorium? Moratorium, you are aware, this is a almost, I would use a simple this one. It's like a legal freeze. That is, now that this is in the court's purview and now it is in the NCLT's purview, they don't want any legal actions by anybody to be taken on the debtor, because now the NCLT is monitoring so closely. So, they are going for a moratorium. So, it's a legal freeze. No action can be taken on the debtor. Even if you are a secured creditor, where there is your charge has been registered and you have every right to recover it. But once this process is initiated under IBC, even as a secured creditor, you can't enforce for the security interest. So, you can't go for it, and no legal action, no suits can be initiated, or whatever is initiated you cannot continue, and no transfer of assets, that is not permitted. And recovery of property, by the nobody can recover any property which is occupied by the debtor. So, what are maybe your other rights, this is going to dominate. That is why we call this as a moratorium. To put it simple, this one, once it is announced by NCLT, this will supersede the any other provisions that are required. Then, even in the moratorium period, this will not get affected. That is, any supply of essential goods or services, that will continue. So, there won't be any freeze on it. And similarly, such important notified transactions, they won't stop you from doing it. And this will also not protect a surety under a guarantee scheme. So, he will not be protected. So, learn it simple. What is moratorium? It's a legal freeze for everyone else, including the courts. Nobody can touch a debtor. So, to understand, is this moratorium helpful for the debtor or is it a punishment to the debtor? It's like a boon, it's a benefit to the debtor. Once, because the process is already initiated, now NCLT will not allow any other courts or any other authority to take any legal action on the debtor. So, they want the debtor to completely focus and support this resolution process. So, therefore, a legal freeze has been permitted, by which others can't do. But however, whatever relating to essential goods and services, it will be continued as usual and they won't stop them from doing. That is what in the material you learn as what can be done and what cannot be done. So, that is what is required. And once the NCLT is finalizing this moratorium, it will be made a public announcement. So, it will be announced publicly that there is a moratorium period announced. So once that moratorium period is publicly announced, it will be followed by appointment of IRP. Now, who is appointing? NCLT is appointing, but who had recommended by all the people, either the financial creditor or operating creditor or the corporate debtor himself. They are the people, they have given the name from their side, but NCLT will consider the disciplinary proceedings and the standing of that professional in the society, and then formally this IRP is appointed by the NCLT. And once this is done, then an announcement is given all to the creditors to submit their claims. Now, it is like now they are going to tell every creditor, now we are going to initiate the recovery process and the resolution process, give us your claims. Then people will start giving this one. So, where does this point is ending is, NCLT has accepted your application, which is filed by any one of these people. Then because they have accepted, first thing they will do is they will announce moratorium, so that no other courts can interfere in this process. So this will supersede all the other legal requirements. So they will publicly announce this moratorium, and whomever the IRP recommended by these people, NCLT will appoint him as an IRP. Now, once this IRP is been appointed, he is the control center. IRP is the control center. Now, when we say control center, what he does? So, he will literally take control of the management. That is, the board of directors are suspended and he will take control of it. And he will start collecting claims by interacting with all the creditors. And he will also form one of the important one, that is committee of creditors. We call it as a COC. So, he will constitute a committee of creditors and he will try to preserve the company assets for the benefit of it. So, he is the control command and he is appointed by NCLT. So, this is also an MCQ for you. Who will appoint this interim resolution professional? So, he is appointed by NCLT. But who is recommending? Any of this financial creditor or operating creditor or corporate debtor who are had made application, they would have given their reference, but it is up to NCLT to appoint him. So, this is what is the starting point of it. So, once the IRP has been appointed by NCLT, he will literally take over the management. And as I just mentioned, the entire board of directors who are there, they stand suspended. So, they will not have any role to play hereafter, and the entire management vests with this IRP, and all the employees and officers must cooperate him for any instructions or commands that or any support that he requires. And all the financial institutions must also act only on IRP instructions. When we say only on them, but not based on the board of directors. So, they will not listen to the board of directors. Even the financial institutions must start listening only to this IRP. So, literally he is the face of the management. So, once he is appointed, that is the power of him. And what he can do? He can do anything. So, what is the authority of him? And this is also, you may get a question as a short answer. What is that he can do? Now, he may operate the company, because he has been having the powers to operate the company and to access books of accounts and access electronic records, like whatever the powers the board of directors or will have normally, he will also be allowed to have the same ones. And he can enter into contracts, he can appoint any professionals, he can raise any interim finance, and he can ensure statutory compliance, he can do everything. But only thing is, he can do, but approval of creditors also may be required. So, all these powers he may not be able to handle himself, but he can take decisions with the support of creditors. We will get into it. And what are all the duties? Now, that is the authority. Now, what is that he should do? So, he will collect the financial information that is required for deciding in the resolution process, and he will receive and verify the claims by the respective creditors. And the major important point, he is the one who will constitute this committee of creditors, and then he will monitor the assets, he will manage operations, and he will file information with information utility, and then he will take custody and control of assets and any other duties. But basically, this is the topmost and the most powerful one that he will be doing it. Committee of creditors. And once committee of creditors is appointed, you see the process. First, any of this I am repeating, financial creditor or operating creditor or the corporate debtor himself will be recommending for this insolvency resolution professional. They will give the name, but can they appoint? No, they cannot appoint. And who will appoint? NCLT will appoint this IRP. Now NCLT has appointed IRP. Then what the IRP is doing? He is appointing COC, committee of creditors. So he is forming, he is constituting this committee of creditors. And what is this committee of creditors? Once they are appointed, they will become the decision hub. So controls are with the resolution professional, but all decisions we would require, like normal scenario, any decision taken by the company, particularly the significant transactions, you require the approval of the members. But here members and boards will not have any say in this, and it is the creditors who is going to take the command. So that is why we will say that it is the decision hub, this committee of creditors. Now, who would be there in it? And that is what we will see. What is the composition? Now, this is important. Who would be there in this committee of creditors? Basically, the financial creditors. Only financial creditors will be there. Who should not be there? The related parties. So, who are there with that? They should not be a party to it. But what about operational creditors? Operational creditors will never be a part of this committee of creditors. But what happens if a person is both operational creditor and financial creditor? That is a combination. He is a operational creditor as well as a financial creditor. Then his name will be included in the COC to the extent of his financial credit. Let's say he has given 20 lakh here, and under operational creditor, he is operational creditor for 50 lakh. So total he has to recover 70 lakhs. So to the extent of his 20 lakhs, he will have the voting right here. So, for his role as a financial creditor, he can still participate in it. Then voting. So, generally the committee of creditors, like the members meeting, majority of them are 51%, but in few cases 66% would be required. So, we need to see what all the situations where this 66% is required. Now, so what has happened if you go back and see? Now we wanted to initiate, that is the financial creditors, operating creditors, these guys, they wanted to initiate this process of resolution, and they made an application to the NCLT. Then NCLT will see whether to accept or reject. In that 14 days, they have accepted. Now they have appointed this IRP. Now once IRP is appointed, then he is appointing COC and committee of creditors. Now what does that COC does? So in the first meeting, first ever meeting, so look at here, the first meeting itself, the COC with the voting approval of 66%, they will appoint resolution professional. But whom they will appoint resolution professional? Either the IRP who has been continuing as of now, they will continue from IRP to RP, or if the committee of creditors are not happy with this IRP, then they can replace this IRP with another resolution professional. Maybe the IRP was not willing to continue, whatever is the reason. Now this IRP, that is the interim resolution professional, will be converted into resolution professional. So now if I go back, NCLT is appointing this IRP, then IRP is appointing COC, and the COC is appointing resolution professional. They may appoint the same person as a resolution professional or anybody else. This is the flow that is required to be understood in this process. Now, let's move on. So, now who is been appointed? Now the resolution professional has been appointed. So, now that he is a resolution professional, you have to forget the word interim resolution professional, because now he is going to take charge. Now, what he can do? Now, he will take care of the complete management. What all he can do? He can preserve the asset, he can continue the business, and the most important is this resolution professional will invite resolution applicants. Who are these people? These are the applicants who are submitting a resolution proposal. Who all these people can be? Generally the creditors, or even any third party agencies also, or at times even the government also can be a resolution applicant. Whoever are trying to help resolve this, they all will become this corporate resolution professionals, the applicants. And then this applicants will present the plan. Whatever is the plan presented by this applicant, now this resolution professional will put it in front of COC. And once this is approved, then it will move to this NCLT. Now, let us go back. Now, this resolution professional can handle, he is like a management now, because board is already suspended and members don't have much of the rights over here. Then this resolution professional is completely holding the management. Then can he take all the decisions? No, he requires 66% of approval of the COC before taking any majority of them. So this also mark it as 3 stars from examination perspective. That is, in all these decisions, resolution professional would require the approval of COC to the extent of 66% of their majority. What are all the ones? Raising interim finance, creating any security interest, or changing the capital structure of it, recording the change in the ownership, related party transactions, or amending any constitutional documents, whatever are required to be amended in this process, or delegating the authority to someone else, or changing the management from A to B, whatever it is, and transferring major debts or contracts. So, for all these significant ones, or changing the stat auditors, or inviting prospective resolution applicants and all this, he require the approved 66% majority of the COC. So, on his own he may not be able to act. Then what does he do? So, after appointing him, the resolution professional will prepare what is called information memorandum. What it will contain? It will contain the financial position and the assets and liabilities and the pending disputes and other relevant information. Now that all this financial data is captured, that is, what is that company's assets and liabilities, what is their current position, cash and bank position and all this, and what are the disputes and what any other relevant. So, this will give an overview to the applicants to come up with a resolution plan, because once I know how much money you have, how much more you need to have, and what are all the assets you are having, then keeping these points in mind, anybody can prepare resolution plan. So, the resolution professional is giving this back end information to all the prospective applicants and suggesting them to prepare a resolution plan. Don't worry, I am taking you through step by step, and as a consolidation, I will take you through the entire process one more time, and I am sure you will get the confidence. So just hang on, and once you listen in detail here, then at the end I am going to summarize and I am going to give you the complete grip to it. Now just kindly hang on. Now once the resolution applicant is submitting the resolution plan, then he will also submit one affidavit saying is eligible to be to submit this plan and is not disqualified under 29A. What is this 29A? I will come back to it, but let us continue with the flow. Now, the plan, whatever the resolution applicant is submitting the plan, that plan should cover everything. That is, though he is appointed by the committee of creditors, the way to look at it is, though it is by the financial creditors, because who would be there in COC, committee of creditors? Basically financial creditors will be there. They will take care of themselves, but that is what this will highlight. It is not just you taking care of yourself. You must take care of operational creditors and you must take care of this cost, and whatever is the fees that you have to pay to the resolution professional, that also had to be taken, and they will be maintaining and implementing and supervision mechanism. So, that also the plan should include, and compliance with the code. So, more importantly, though it is filled with financial creditors, the plan what they are approving should also protect the operational creditors. That is the way how it talks about. Then what could be this cost? Whenever we said that resolution cost, what it can be. It can be the interim finance or the cost of raising finance or fee for resolution professional. This is important. That will also be part of it. And cost of running the business and government expenses, anything, any documents to be filed and all this, and other prescribed costs. So, all this will be. So, simple, the resolution professional is appointed by committee of creditors, which is filled with this financial creditors. Nevertheless, they have to take care of operational creditors and CIRP costs, that is the government dues and everything. So, this is the background of it. Then what the committee will do? So, this committee of creditors will go through the resolution plan submitted by the applicant, and then they will see whether to approve or disapprove. And if there is a majority of 66% voting is done by the financial creditors, then the plan is deemed to have been approved. So, once the plan is approved, then they will give that plan to NCLT, then the NCLT will go through one more time and they will approve the plan. The NCLT, what it is looking at it is the compliance with the code. So, first COC had comment, that is the resolution applicant had submitted this plan to the resolution professional. He in turn give it to the committee of creditors, and the committee of creditors will go through it, and if it is approved by 66% of it, then it will be handed over to the NCLT along with the resolution of 66%. Then NCLT will go through it, then NCLT will finally say yes to it. But at any stage, if the NCLT doesn't approve this plan because they see certain non-compliance from the code or any such allegations, then what happens? If the NCLT is not approving it, then the next plan is only to go for liquidation, because people try to find a solution to let that debtor continue as a going concern, but if that is not happening, liquidation is the only source. So, NCLT either will approve the plan, but if the plan is rejected, then it will result into liquidation. So, this is the flow of it. But once NCLT is approving the plan, it becomes binding on everyone. So, it is binding on the corporate debtor, it is binding on the employees, it is binding on the creditors, all types of creditors, and the guarantors, all stakeholders. So, it is binding on everyone. And the most important point and the last point of this is, what if NCLT rejects? If NCLT rejects the resolution plan, then the liquidation proceedings will continue. So, this will become the beginning point for our 2.3 module. So, now that you have been listening for quite some time, I will explain it. If you can see through this chart, what is the mechanism, what is the flow? So, I would call this as a flow chart or process chart. So, to make you understand, first what happens? There is a default, because unless there is a default, this entire step wouldn't arise. So, there is a default, but who committed the default? So, corporate debtor had committed the default. Then, if there is a default, then what is step number 2? Step number 2 is CIRP is initiated. Who is initiating? A by any of them: a financial creditor, operational creditor, and corporate debtor. Tell me the sections. Yes, section 7, and here for operational creditor, good, section 8 or 9, and for corporate debtor, section 10. Wonderful. So, these people will initiate. Then what this, once you submit the application, it is for NCLT to accept or reject. Now, how many days NCLT will take? 14 days. Good. 14 days NCLT will take to approve or reject it. Then what happens? Now, the NCLT will appoint IRP, whomever you are recommending, and this IRP will appoint the COC, that constitution of COC. Who would be there in this? It is a group of financial creditors. So, they will be there in it. So, who is constituting the COC? Interim resolution professional. So, this itself is a point in your examination. Now, then what does it do? Then that committee of creditors, first meeting, they will be appointing converting this IRP into RP. So, or they may appoint someone else, resolution professional. Then what he will do? So, he will gather all that financial information and he will start inviting resolution plans from all the eligible resolution applicants. And once they submit that plan, so then it has to be approved by the COC at 66%, and once it is approved by 66%, then you will submit this plan to this NCLT. So, that process we will see. So, going back to it, first the RP had requested the eligible resolution applicants to give a plan. Then the resolution applicants, eligible resolution applicants, start submitting their plan to resolution professional. So, they start submitting the document. Then the resolution professional will start examining the feasibility of it. Now, whether it is going to be feasible and is it in compliance with the IBC code and all this, he will start validating. If he believes yes, it is in compliance, then he will put it across in front of COC for its approval. Then the COC will go through it and approve with a majority of 66%. And once this is approved by COC, it will go to NCLT, and if NCLT is accepting it, then it will become binding on everyone. But if for any reason, if NCLT is not accepting it, then your liquidation proceedings will start. So, this is the entire process. You can go through it in comfort. I am keeping it. You can take a screenshot and go through this process. This will give you a good understanding as to the entire process. So, by now, I am expecting that you are comfortable with this entire process of corporate insolvency resolution process. So, and there are the sections involved in it, how is it getting initiated, who are all the authorities that are coming in. So, we have covered basically the majority portion of it. Now, if you see what are all the authorities that we talked about, first is the central government who will frame the rules, and broadly I am trying to talk about, and IBBI is there, it is a regulatory agency which is controlling all this, and there is NCLT which is an adjudicating authority in this, and any claims on NCLT you can always appeal to appellate authority. So, NCLAT, so you can appeal. And who are all the people involved in it? So, there is an applicant. Who can be that applicant? Either financial creditor, operational creditor, or the corporate debtor himself under this 7 to 10 sections. And then comes this interim resolution professional, and he will appoint committee of creditors, and this committee of creditors will again convert that IRP into RP, and then this RP would start requesting the eligible applicant to submit their plan. He will evaluate and put it across to COC for their approval. If it is approved by 66% of COC, then it will go to NCLT for its final approval. And if NCLT approves it, then the plan will be implemented. If NCLT rejects it, then liquidation proceedings will start. That is our next point of discussion. So, this chart also will help you summarize in another direction. You can take screenshot and then making it enlarge and look at it. But in any case, I have given this handwriting notes in the description. I have attached that notes. You can go through that notes, go through it, make use of it wherever it is useful, and at any point of time you feel there is a point on which I need to explain you the concept, kindly put it in the comments. I will try to clarify it in the comment, or if I feel it requires little elaborate discussion, I don't mind making another video and send it to you personally. So, with this, I am assuming that you got an understanding of this CIRP process that is involved in it. So, with this, let us close the day for this video with that conclusion, and whenever we meet next, we will follow up with this other process like the liquidation process or our definitions, and finally the personal insolvency. So, hope to see you in my next video with those clarifications. Please make the best use of it. So, wish you all the best, and don't hesitate to put in your comments, positive or negative, put it across. If I feel you are not clear about it, I will correct myself and make one more video. My entire objective is to make you familiar. In that process, if I realize that, or if you believe that I was not clear on certain points, kindly feel free to let me know where you are getting stuck. I will do my best to reach out to you personally or through this chat or through another video to clarify. So till then, enjoy, and let's meet in our next video with another concept. So thank you and take care. Bye bye.